Okay, Assalamualaikum and a very good morning to all. Okay, and as for today, we will continue with our next chapters. Okay, which is burden of payment accounting system. Okay, and as you can see, this is one of the topic. Okay, that you can relate. Okay, with what you have learned on your economic subject. Okay, because burden of payment of the country itself, okay, is one of the what we so called as the overview, okay, of the performance, okay, more toward in terms of the financial, okay, of the country itself, okay, and this is one of the what we so call as standard practice, okay, all over the world. Okay, and what we can see right here under balance of payment accounting system, okay, it is actually a double entry bookkeeping system. Okay, as you can see that the common ledger of account. Okay, we have debit, we have credit. Okay, so end of the day, we should have this kind should be balance. Okay, measure and record transaction between resident of one country and resident of all other countries. Okay, and usually this balance of payment accounting system, okay, is more towards it will record, okay, the flow of money, okay, that come into your country and outgoing. Okay, means uh, money, okay, that flow from your country. Okay, and this is what we have the importance of BOP statistics. Okay, it will help identify emerging market for good and services. So as we know, most of the country they are doing trading. Okay, more towards import and export. Okay, like I did mention before, what is export? Goods you are selling. Okay, export good you are selling and money come into your country. Okay, and how about import? Import is goods that you are buy from the other country and money should be flow out from your country. Okay, and as right here we get to know how to balance between these two transactions and can one of possible new policy that may alter a country business climate, because we know that it's a bit risky. Okay, if you too much concern on export or too much concern on import. Okay, and it can indicate reduction in the country forex reserve. Okay, because we know that, okay, if we do more towards debt, okay, high in term of debt, okay, it may be liquidate our reserve, okay, and can signal increase riskiness of lending to particular countries. Okay, because, okay, if sometimes our trade balance, okay, is deficit. Okay, when it comes to deficit means you are looking more for import, and the other way around, okay, you try to balance by using the others account. Okay, that I will explain this further in the next slide. Okay, what is actually the major component of the BOP system? Okay, this is the major component. Okay, the main is the current account. Okay, so the current account is more toward the trade transaction, is more to the value, okay, of the trade, export and import. Okay, and we also have capital account. Okay, what is capital account when it comes to the change of the ownership? Okay, this is what we have under the capital account. Okay, official reserve, okay, in terms of the forex, okay, gold, okay, and error and omission. This one, which to balance, okay, if you are facing uh, the deficit or surplus in balance of payment. Okay, let's go one by one of the component. Okay, this is the component of the current account. Okay, where we are actually dealing with the export transaction, okay, and import of good, okay, or merchandise. Okay, what is type of good? Tangible, okay, like machinery, okay, electronic device, okay, that you export to the other country, okay, so money flow in, okay, and import like TV or what we so called as radio from Korea, okay, so the money flow out from your country. Okay, this one is more toward the tangible. Export and import of service. Okay, what is export and import of services? It's more toward intangible. Okay, where you can see most of the sector is under health, okay, under education, under tourism, okay, under banking sector. This one is all is the services part, okay. So when you are actually offering to the other country the services, money come in, and if you are buying, okay, or you are importing, okay, that kind of service, okay, it's more toward you are actually uh, buying or paying, okay, to the other countries, okay. And we also have this kind of investment income, okay, from the other country, okay, and also how the other countries, okay, get, okay, income, okay, in our country, okay. And we also have a type of gift, okay, it's more toward unilateral transfer, okay. So this kind of thing under gifts, okay, you can see, okay, it's a fall under the part of debit if you give, okay, and if you receive, it fall under the credit one, okay. Or we can say either it debit or credit, okay, same like what we have under goods, services, and the others, okay. This kind of dividend and interest, okay, is when investor, okay, invest in your country, okay, invest in your country, so you should pay, it fall under debit. And if you receive dividend from your investment from the other country, okay, it fall under the credit part, okay. So this is what we have under the current account components, okay, which should be balanced, okay, like what we have under trade balance right here, export and import trade balance, okay. So this trade balance is more towards what we call as a function of the balance of payment, okay. And next one is capital account, okay. Usually this capital account or some of the uh, book is take under it fall under the financial account, okay. So what we have under this capital account, okay, or some of the books take under financial account, okay. So the component is foreign direct investment, okay. As you can see, what is foreign direct investment? Okay, when you are financing a project overseas, that one is money flow out, okay. And if you receive financing from the other country, okay, that one is money flow into your country, okay. And how about the foreign portfolio investment? When you are dealing with this kind of uh, equity and debt, okay, in terms of the short term or long term, okay, it's more toward the equity, okay, or what we so call as the shares, okay, the stock, okay. After that one is you are dealing with the short term, and long term foreign portfolio investment is more toward bond, okay. Maybe it takes longer period, okay, like 10 years, sort of that, okay. So this decision, okay, like buying bond, okay, is it will make your balance of payment, okay, to be balanced, or will give this kind of a deficit or surplus, okay. And how about this kind of capital account transaction? As you can see right here, okay, portfolio, okay, it can be considered under short term, okay. If the portfolio is short term, okay, the maturity should be 1 year or less. Kita panggil tempoh matang dia adalah kurang daripada setahun, which the motivation is investment income or facilitation of international commerce, okay. It's more towards you are dealing with a less risk, okay, less risk instrument, okay. And typical investment right here, as you can see, is checking account balance, okay, the check account, the uh, the current account. Okay, and what we have, the time deposit. Okay, it's more toward this one is like you are dealing with this kind of fixed deposit. Okay, 1 month, 2 month, 3 month. Okay, usually the bank will appear, okay, how much that you will receive the return. Okay, commercial paper and bank loan. Okay, so right here under the short term portfolio, you are dealing with investment instrument, okay, less than a year. Okay, if more than a year, it can fall under this kind of government note and bond and corporate stock and bond. Okay, this one is more usually you are dealing with what we so call as instrument. Okay, like uh, when you are buying bonds, okay, buying bonds from the other country. Okay, it actually will affect, okay, your financial performance, okay, up till the maturity. Okay, this is what we have under the long-term portfolio. Okay, and somehow, okay, some of the short term, okay, can be considered under the stock. Okay, but here, okay, under the corporate stock, okay, if you are actually dealing with stock, okay, for the sake of the company, okay, or considered as corporate stock. Okay, so that one is considered as long term. Okay, not as a investor trader. Okay, investor trader, okay, they are just looking for profit. So they buy stock, okay, when the price of the stock is increasing. Okay, so what happened? They will sell the stock also just for short term. Okay, but for long term, if you keep holding that kind of stock. Okay, and next one, okay, is FDI. I did mention before. It's more with the project financing. So the maturity is indeterminate. Okay, means that up till the validity of the project. Okay, maybe 5 years, okay, maybe 10 years. Okay, so how long you want to stay in that country. Okay, when shut down, okay, that money will go back to your country. So active control of organization own at least 10% of voting stock is one is the motivation. Okay, why actually they go for a project financing abroad. Okay, and typical investment is more toward foreign subsidiaries. Okay, if you want to increase your international subsidiaries, okay, or factories. This one is more to projects, okay, like Sony. Okay, Sony is in Japan. Okay, if they want to open their plant in Malaysia, okay, their factory in Malaysia, okay, that one is considered as foreign direct investment. Okay, and international joint venture. So many type of investment, okay, that fall under this capital account. Okay, official reserve account. Okay, this one of the small account under balance of payment. Okay, it will record the level of official reserve held by a national government. So most of the uh, what we so call as national reserve. Okay, the value, okay, will be account under this account. So official reserve comprise of four type of asset. Okay, uh, the valuable one is the gold one. Okay, convertible currency. Okay, this one is more toward foreign currencies. Okay, special drawing rights. Okay, which you have a special what we so call as rate. Okay, when you want to apply for this kind of financing, okay, from international monetary fund. Okay, and also reserve position at the IMF. Okay, because once you place some amount of money, okay, in IMF, it will be considered as the reserve. Okay, so this is what we have under official reserve account. Okay, and last one is one of the tools, okay, to balance the balance of payment. Okay, when we are facing surplus or deficit. Okay, so what we have here, okay, under balance of payment accounting system, okay, the result should be balanced. Okay, it means that you are not encouraged, okay, to face this kind of surplus or deficit, okay, under your balance of payment. Okay, so that's what, as you can see right here, current account, okay, plus capital account plus official reserve account, okay, plus error and omission is equal to zero. Okay, example, okay, how to receive this kind of zero. Okay, when it comes to current account, okay, like what we have for China case, okay, most of the countries nowadays invest in China. So China become export country, okay, exporters, okay, biggest exporters. So when it comes to biggest exporters, they are actually selling the good. When selling the good, money come into their country, okay, very in a huge amount, okay. So there is possibility, okay, for China to receive this kind of what we so call as trade surplus, okay, in terms of the value of the current account, okay. So the current account will face surplus. So to how to make the account to be balanced, okay. So under the capital account, okay, you can see there is FDI, okay, there is portfolio, okay. So how to make the money, okay, not only stay in their country, it must be flow out to the other country, okay. So that's why, okay, to be balanced, okay, China will invest to Malaysia, okay. So their money will be flow out to our country, okay. So then it's good for their what we so call as balance of payment. So to be balanced. This is some of what we so call as how to balance the balance of payment, okay. Current account if facing surplus, should be the capital account must be deficit, okay. Circumstance accounting for errors and omission, this one is the tool if you are not facing this kind of account balance, okay. So end of the day, you have to put under error and omission, okay, which you count this kind of under reporting of capital account transaction, okay. Deliberate action by individuals and error in current account. Usually there is some case that like when we are facing this kind of money laundering activities, okay. So this kind of the activity will what we should call as lead toward this kind of error and omission, okay, under the balance of payment, okay. And as you can see right here, this is some of the overview of US balance of payment, okay. As you can see right here, export for US is maybe 1 trillion. This one is billion, okay. So when it comes to billion here, and this one is for trillion, okay. For import, okay, if more to 2 trillion, so balance of merchandise trade itself, they are facing this kind of trade deficit. What is trade deficit? When import more than export, okay. So be fair with what formula that uh, I said before, okay. So if we are facing this kind of deficit, okay, this one is more to surplus, and end of the day, balance on current account is deficit, okay. So how to balance back? Should be the capital account must be surplus, okay. So that's why most of the money from US they will invest abroad, okay. So sorry, they will receive this kind of what we so call as money from abroad, okay. If you can see, yeah, foreign investment in United States mean money come into US, okay, might be surplus right here, and they invest abroad is lesser, okay. So end of the day, there is money surplus right here, okay. And to what we so call as to uh, balance back, okay, we have this kind of error and omission, okay, to make sure that our balance of payment is the zero. Okay, so there is kind of thing, okay, under the school of thought, okay, when it comes to the capital account. Okay, some of the books state that this is what we so call as financial account. Okay, and some of the view also put, okay, the components like when you are selling the patent, copyright, this one is more to intangible. Okay, that one should be fall under the capital account. Okay, some overview of the illustration, okay, of the US value of payment according to various reporting measure. Okay, the trade surplus. Okay, when it comes to trade surplus, you are actually doing more export, okay, rather than in import. Okay, trade deficit, like what being faced by US just now. Okay, they are doing more import, mean buying goods from abroad. Okay, means that their money will go abroad. Okay, and the physical or tangible goods will come into their country. Okay, an official settlement balance, how to make your account balance to be zero. That's why I give some of the recipe. Okay, if your current account is deficit, so should be your capital account is surplus. If your current account is surplus, okay, because this is the two main component, okay, and capital account should be deficit. And the next one, okay, we use this kind of the error, okay, and some of the omission, okay, to make sure that our account to be zero of balance. Okay, this one service trade balance. What is service trade balance? Okay, it's more toward import and export in intangible activities. Okay, like I did mention, health industry, okay, tourism sector, okay, education sector, banking sector. This one all fall under service. Okay, so here is a option trade balance. Okay, and you can see. Okay, this is the what we so called as the balance. Okay, most US account is balance. Okay, where they actually facing surplus, okay, on service trade balance and deficit, okay, in this kind of physical trade balance of good and service. Okay, current account more toward deficit also. So that's why how to balance back. Okay, they should have a component that surplus and component, okay, that deficit. Okay, so that's all for today. Okay, and next class I will explain to you about the uh, what we so called as assignment that you are need to prepare, okay, for this semester. Okay, thank you for listening. Okay, that's all for today. See you, okay, on our next upcoming class. Okay, thank you.